You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 6th day of March, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Hope you had a great weekend. This is our second live broadcast of the day. Our first live broadcast is from 9:30 a.m. to 11:30 a.m. Eastern. Now that's our live training room. It is reserved for members only and those taking their 1-week free trial. If you've not taken your 1-week free trial, you can do so by going to mytradingiq.com. Just click the button at the top of the page and the journey begins. At 11:30 a.m. Eastern, we take a 30-minute break. We come back at 12 noon Eastern for the afternoon broadcast. There's two different ways you can join the afternoon broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. Could be your phone, your tablet, your PC, your Mac. Now, the best way to join is to go to mytradingiq.com and scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. You don't have to do it again. What will happen going forward is every trading day, you'll get an email about an hour before the afternoon broadcast starts. So at 12 noon Eastern, all you have to do is simply click the link in the email, and it will automatically log you into our platform. Now, I call that the better way because it actually gives you access to the question box so you can ask questions and participate in the discussion. If you're out of the office, away from your desktop, but you still want to join the afternoon broadcast live, all you have to do is take that internet-connected device and point it to our YouTube channel. It's easy to remember. YouTube.com, you already know that part, /CFRN. YouTube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, there's over 2,200 daily live episodes archived for your educational and viewing pleasure. It's also a great way for new people to get to know who we really are. You hear what we say today, but you can scroll back and see what we were saying 6 weeks ago, 6 months ago, a year ago, 2 years ago, even more. What you'll find, and of course we don't expect you to listen to every broadcast, but just pick some days at random. Just listen to little snippets, from different time periods. Just pick days at random. What you will find is a thread of connectivity and a thread of continuity woven through each and every daily broadcast. The biggest change that's been made in the last, since 2008, is we're now available on TradingView. TradingView is without a doubt become one of the most popular trading platforms and charting platforms on the internet So we're excited to have our indicators available for you now on TradingView. And when Michael comes on at 12:40, he'll explain to you in detail what you need to do to get the indicators set up on TradingView. He'll even do a private one-on-one mentoring session with you and get your charts set up for you. So we've done everything we can to make it as simple as possible. And that's what we've been doing since 2008. Always trying to make things as simple as they can possibly be. Because the world of trading can be a little daunting, a little confusing, and there's a reason and a purpose to that. Because the more complicated it is, the more things you have to buy to solve the equation. So we've taken a different approach. Instead of more stuff, less stuff. Price, no matter what time frame you're trading, no matter what market you're trading, the clock on the wall is always price. So let's open with a word of prayer. We've been talking the last, about 4 days on finding financial balance in our lives. We've talked about everything from, getting out of debt to budgeting. If you've missed the previous 4 days, you can always go to youtube.com/CFRN to get the complete picture. Our scripture today is Matthew 7:24 through 27, and I'm reading from the Message translation. These words I speak to you are not incidental additions to your life, homeowner improvements to your standard of living. They are foundational words to build a life on. If you work these words into your life, you're like a smart carpenter who built his house on solid rock. Rain poured down, the river flooded, a tornado hit, but nothing moved that house. It was fixed to the rock. But if you just use my words in Bible studies and don't work them into your life, you're like a stupid carpenter who built his house on the sandy beach. When a storm rolled in and the waves came up, it collapsed like a house of cards. Again, that's Matthew 7:24 through 27. So our final talk about finding financial balance in our lives is to simply be the wise man. After reading Jesus' words in Matthew, as we just did, how would you describe the wise man and foolish man in today's language and culture? How do you see each of these types of builders in the world around you? In order to withstand the storms of life, you have to have a solid foundation. That foundation is Jesus Christ. And praise God, we don't have to guess what he wants us to do. He has graciously given us his word. In order to know what he thinks and what he says, we must study the Bible regularly. But in order to be the wise man, we must put his words into practice. Planning is one of the ways we do this. Remember, it wasn't raining when God told Noah to build the ark. So even if things are good for you now, it doesn't mean the storm isn't coming. If you are serious about wanting to start working towards financial freedom and honoring God with your money, it's going to take a plan, just like trading. So what are you waiting for? Ask yourself, in what areas of my life am I like the wise man? In what areas of my life am I like the foolish man? Join me in a word of prayer. Heavenly Father, thank you for your word. Thank you for truth, wisdom, and a firm foundation on which we can build our lives. Help us prepare for future storms. Help us make a good financial plan through the wisdom and direction of your Holy Spirit. It's in Jesus' name we believe and pray. And everybody said, amen. All right, let me give you the numbers from around the world. Again, Michael will join us about 12:40. He'll give us a recap of everything that happened in the live training room this morning. And then at 1 p.m. Eastern. So if you're listening to this after the fact, if you want to go to the TradingView live stream, just fast forward to the 1 hour mark, and that's when it'll start. All right. We got mixed markets again. And as we've discussed many times, that can lead to issues. Currently, the Dow's up 152 points. The Nasdaq's up 114. The S&P 500 is up 29. But our man in the street, the Russell 2000, is down 14. In the commodity basket, crude oil up 51 cents, trading 80.19 last. Gold up $1.70, trading 18.5630 last. Silver down 2 cents, trading 21.21 last. In the Asian markets at the close, the Nikkei posted a gain of 310 points, a little over 1%. The Shanghai fell 6. The Hang Seng gained 35. And in the European markets at the close, FTSE down 17, the DAX up 75, the CAC up 25. So that gives us a mixed day in Asia. It was a mixed day for the UK. And so far it's a mixed Radio Monday here in the US of A. Logic 247. The Monday session began last night at 6 p.m. Eastern, just as the Tuesday session will begin tonight at 6 p.m. Eastern. The Monday session will officially close this afternoon at 5 p.m. Eastern. So any alerts that are issued on Sunday night are based on the previous week's weekly trading zones. The new weekly trading zones come out for our members and trial members Monday morning at 6:15 a.m. Eastern. We've published the zones since December 14th of 2009, and once they're published on Monday morning, they are carved in stone for the entire week. They don't change. We don't massage them or manipulate them in any way whatsoever. It is what it is once they're published Monday morning. Last night we issued only 5 alerts. And at the time Valerie did the recap this morning at 7 a.m. Eastern, we were still waiting on 2. So we had 3 actionable alerts. So far, nothing stopped out on the week. Now we're in week 240, and we're well over 13,000 individual handcrafted alerts. In fact, I'll show them to you in just a second. What we've averaged over the last 240 weeks is that, on average, 20% or less of the alerts get stopped out based on not risking more than $300 per contract per trade less when possible, based on market structure, and a very simple 3-step process that we teach all of our passport holders. Last week we ended up with 18%. So it's early in the week, we're at 0. Now, for anybody that's new, here's what the alerts actually look like. And not only members, but trial members have access to the alerts as they come out. The Logic 247 alerts can come out at 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. So our day session is their night session and vice versa. We ended up last week with just 18 alerts because of market conditions. Whenever triggered, we had 17 actionable alerts, of which 3 or 18% would have been stopped out based on that risk profile I just gave you. And so bonds were the first one out of the gate last night. And then we had, there's a long, an initial target, and a final trade to target. The weekly trading zone is always the final trade to target above on a long, below on a short. We had a long on the euro. We had an initial target, which is designed to help you just get your goal for the day. And then we had a second target or potential resistance, and then the final trade to target. And on the ES, we had a long at 40.51. The initial target, 40.53. That's your 2 points for the day. Now, I said the maximum you want to risk on any trade is $300 per contract per trade, less when possible based on market structure. However, you never want to risk more than what the potential profit is in a trade. And it's easy to know what the potential profit is because you take this number here and subtract it from this number here, and that tells you what the potential profit is. That's on longs. So bonds, the euro, and the ES went fine. At the time of the recap, we had no trigger on gold. And on crude, crude had no entry on the first trigger. That's part of that 3-step process that we teach in our members' unlimited one-on-one mentoring sessions. And it's 13,617 individual handcrafted alerts over the last 240 weeks. Now, the logic alerts are based on current price action, and they can come out at any time as opportunity presents itself. Our original alert service, the concierge trade alerts, they're a little bit different in a couple ways. Number one, they don't come out around the clock. They're posted shortly after the Globex open. Last night, they were posted at 6:35 p.m. Eastern for members and those who are on the free trial. There's 2 numbers for each market. Now, this broadcast is open to the public, so unless you're a member or a trial member, you did not get these numbers at 6:35. So if you want to grab a screenshot, you're welcome to do so. Okay. Now, once the numbers are posted, you should go to your 30-minute chart of whatever market you trade and make a note of where price is at the time the CTAs are posted. And then draw a line in the sand, in this case at 40.75, and a line in the sand at 4,003. Those serve as visual cues to help you know which way price is trending. If price is above the 30-minute BVC, it's attempting to reach the long target. If price is below the 30-minute BVC, it's attempting to reach the short target. It's kind of that simple. But you still have to look left to spot potential obstacles, support or resistance, depending upon whether you're trading long or short. And over time, you'll gain an understanding of how price behaves around a weekly trading zone. Price is always trying to reach a zone. If price is above the BBC on the 30-minute chart, it's trying to get to the zone overhead. On the other hand, if price is below the 30-minute BBC, it's trying to get to the weekly zone below. Please resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, let's go take a look at the charts. And we'll start with the daily chart, as we always do. Now, some might say, well, you know, I don't trade the daily chart. I don't either. But you know who does? The institutions. And it's the institutional trading that moves price. Not retail traders trading one contract or even 10 contracts. Institutions have accounts denominated in hundreds of millions and billions of dollars. The typical retail trader has an account denominated in thousands or maybe tens of thousands of dollars. So by looking at the daily chart before we go to the 30-minute chart, we have a good idea of what the institutions are up to, and we're also able to determine where major resistance and major support are. Last night in the discussion group, I posted, because we closed on Friday above the daily BBC, right at the 24% fib retracement. Now, these fibs go from the low put in on October 13th to the high put in on February 2nd. We've been in a downtrend since March 29th of last year. So we're closing in on a year of being in a downtrend. And for most of the year, we had reverse fibs on the daily chart because of the fact that we were in a downtrend. And we're not in an uptrend yet. But just to keep things clear, I took the reverse fibs down and just put up regular fibs. Okay. And so on this day, we talked about the beginning of a potential major down leg. We traded through the 24% fib retracement. We found support 1, 2, 3 days at the 38% fib retracement. What I posted last night was, and we opened right at that 24% fib retracement. I said, if price continues to move higher, make sure you're aware of the previous bearish cross right here on the daily chart, because that could be potential resistance. And so far, it has been. Now, if we overcome that, then we've got lots of room to run on the upside to this high, which is potential resistance. We'll double top there. And then, of course, the high that was put in on February 2nd. So institutional traders are definitely buying. However, technically, we know this is an area. Whenever there's a bearish cross that leads to an extended move, the first time price revisits that area, it will almost always be resistance. The opposite is true of a bullish cross. Here we had a bullish cross. Price came back down to revisit the area of the cross, and bang. So this could all turn out to be a head fake. We'll know for sure if price travels back below the 24% fib and below the daily BBC. Now red and falling is starting to curl up under price, And when that happens, red and falling can actually become support, because it may just be on its way to turning into blue and climbing, which is definitely support. The green line is called the BBC, stands for bull bear cross. When price crosses above the 30-minute BBC, that's bullish. We anticipate higher prices. When price gets above the BBC and you've got blue and climbing, then we definitely expect higher prices. Now, the pullback to the BBC holds more often than it doesn't. Here, 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 here. Even hung on here for a little bit, but we already knew to anticipate lower prices because we had changed from blue and climbing to red and falling. The market flattened out here, dropped us down. We bounced off the 38 up to red and falling, where we found resistance. Back down to support at 38. Now we've overcome red and falling. We've overcome the daily BBC. And so if institutional traders remain committed, then we'll trade above this previous bearish cross. And again, we have quite a bit of room to run on the upside. However, if prior to the close today or tonight, buyers take their foot off the gas pedal and price works its way back below, then we'll have a leg, a retracement, and another leg, which this time could take us down to the 50% fib retracement. Now, again, price, when it pulls back to the BBC, whether it pulls from above or below, on your daily chart, it holds more often than not. On your 30-minute chart, it holds more often than not. But eventually, price will trade through the BBC, which keeps the markets fluid and tradable. So we know by looking at the daily chart for just 2 minutes, and this isn't just for the S&P. If you trade Amazon or Walmart or Bitcoin or Ethereum or the British pound, whatever market you trade, crude, gold, silver, spend 2 minutes with the daily chart when you begin your trading session so that you know which way the wind's blowing and you can easily identify where major resistance and support exist. If price were to pull back right now to the 24, to the BBC, we would expect that to be support until proven otherwise. If price works its way below those, then the step line is potential support, and red and falling, which if we were to close even in this area here and then open tonight at 6 p.m. Eastern in this area, that's when you'll see red and falling turn to blue and climbing. So that's another layer of support. However, price could still come back down to test blue and climbing like this. And there's a test to the BBC. But once the step line crosses red and falling, you should anticipate a pullback to the BBC. Just like when the step line crosses blue and climbing, you should expect to pull back to the BBC. Now that's on your daily chart and your 30-minute chart. Everything we teach, all the tools we offer, are fluid across all markets and all time frames, from futures to individual stocks to crypto to Forex. So we start at the top, the daily, and then we drill down. Here's the 30-minute chart of the ES. The vertical line separates today from Friday. Back here's Thursday. Again, these are last week's weekly trading zones because the alerts issued last night were based on last week's zones. Tomorrow on the broadcast, the new zones will be on my chart. So on Friday, during this broadcast, price was down in this area here. and we drew a window of opportunity, and it filled. And then it pulled back to the bottom of the window, filled a second time. So here's the open last night. Price runs up to red and falling and overcomes it, overcomes last week's zone, and that was the logic 247 alert that I just showed you on the ES. Price then pulls back. When we hit the zone, that was the final trade to target. Price then consolidated along last week's zone, 40.54/55. Blue and climbing turned to red and falling. We dipped below the BBC, but ultimately the pullback held as red and falling turned to blue and climbing. We overcame the weekly zone, and you can see this high lines up with this high. Resistance once defined will remain resistance until proven otherwise, which happened on this candle here. And as you can see, price ran up to the CTA long target and has been consolidating there now for 1, 2, 3 hours. And if you'll notice the step line, because of this consolidation, the step line is attempting to cross blue and climbing. We've got a red candle on the 30-minute chart. It's a small one, but it is red. There you can see it a little better. So as that step line crosses blue and climbing, this may be the high of the session. Remember, that's where the bearish cross took place, the previous bearish cross on the daily chart. So price has been consolidating, the step line is crossing. And so if this 30-minute candle closes below blue and climbing, then you should anticipate a pullback to the VVC. We expect it to hold simply because it holds more often than it doesn't. Support there would give us a tradable opportunity on the long side back up to the CTA long target. On the Dow, this was the window of opportunity that we drew in on Friday, and as we can see, that filled. Filled, came back to the bottom window, filled again. Okay, you missed Friday's show, go to youtube.com/CFRN, and you can see us drawing, or see me drawing the line, or the window of opportunity, live in real time. It's not magic, it's just understanding how price flows and knowing where the potential obstacle is. Market opened here for the Dow last night, ran up to red and falling, consolidated along last week's zone, pulled back to the BBC, consolidated there, red and falling. Once that turned to blue and climbing, immediately you're thinking, okay, higher prices on the way. So we had multiple opportunities to get our goal for the day and then some on the way to the CTA target. And we've been consolidating along that target. And now you can see the step line is about to cross. If this candle, now there's only 4 minutes, well no, there's 24 minutes left in the life of this candle. But if it moves below blue and climbing, that step line is going to cross, and we expect to pull back to the VVC and then another leg to the upside. No one knows what's going to happen next in the market, but with our strategy and the indicators, you can always know what the next high probability move is. With a red candle above the BVC, there's just nothing to do there, unless you want to trade counter trend. Now those 13,000 plus alerts in the Logic 247 channel, those are all trend trades based on the 30-minute chart. In other words, if price is above the BBC on the 30-minute, any alert issued is going to be long. If price is below the 30-minute BBC, any alert issued is going to be short. Okay? Try to keep it real simple. It only takes 2 points a day out of the S&P, or 10 ticks in crude, or 10 ticks in gold, or whatever it is that you trade. If you can learn to consistently take $100 per contract out of the market with whatever instrument you trade, and then start building your trading business. And once you've earned enough profit with one contract, the 24/20 blueprint will give you the green light to add a second contract with the profit you earned in the market. Now, the first contract is always going to be funded with your startup capital, but every time the blueprint tells you it's time to add another contract, you only add one at a time, and you only add with profit you earned in the market. Really important to understand that. So we're above the BBC, which tells us to anticipate higher prices, but we're printing a red candle, and we've got this step line about to cross. So there's nothing that I would do right here. On the Russell, here's where the market opened, pulled up to the zone, found resistance. When price moves up to a zone, that's what we expect, resistance. And when it drops to a zone, we expect support. And remember, of the 4 major indices, the Russell, our man in the street, was the only one in the red. So we got a little bit of a double top here since the market opened last night. And now we've gotten below the BBC, along with red and falling. No danger at this point of the step line crossing red and falling, and we've hit the target. Nice 10-point drop. Once everything's lined up. Now, where's price trying to go now? If price is below the BBC, it's trying to get to the zone below. If it's above the BBC, it's trying to get to the zone above. Keep it that simple. Save you a lot of headaches. On the NQ, here's where we opened. We got above the zone. We got above red and falling. And we hit the target. Pull back to the BBC and the zone. Either one of those individually we would expect to be support. We consolidated along that area for a number of hours. Then we made another run at the target. Leg and a retracement. A leg, and notice the step line is crossing. So at this point, I would say the chance of the ES, the Dow, and the NQ following the Russell are greater than the Russell reversing and following the other 3. See how we're crossing, dropping? Now, I don't put counter trend trades in the Logic 247 channel. There's nothing wrong with a counter trend trade. Nothing whatsoever. Not illegal, immoral, or fattening. It just doesn't have the same high probability, low risk as a trend trade. But at this point, we expect price to pull back to the BBC. We expect it to be good support and another leg to the upside. On crude, market opened here, and it just made it to the long target. 80.45. On gold, we didn't quite make the target. We put in a high at 64.30, so we missed it by about, put in a high, 64.30, so we missed it by about 7 ticks. But as you can see, price is just sort of consolidating sideways, but we are below the BBC. Blue and climbing has turned to red and falling. So at this point, we anticipate lower prices with an obstacle right there at that swing low. If price can get below that swing low, then the next obstacle will be here, 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 and that puts you at the short target. On silver, here's where the market opened. It attempted higher, but was just barely able to take out Friday's high. So we had a high, a lower high, a lower high, another lower high. Now we're below the VBC. And here we almost hit the short target. And it looks like after all this wide-ranging consolidation, we're going to hit the short target. A 2-penny move in silver is worth $100 per contract traded. On the euro, here's where the market opened, right at the zone. We had a leg and a retracement, a leg. We traded below the BBC, but found support at the zone. That's what we expect till proven otherwise. On Friday, we went from zone to zone to zone. And then we finally overcame that zone on Friday afternoon, which tells us price is trying to get to this zone. When we got below the BBC, where'd we go? To the zone. Once we got back above the BBC, we went to the zone. But the euro has the same scenario with the step line crossing blue and climbing. So anticipate a pullback to the BBC. That brings us back to the daily chart. And Michael, you ready? He's usually pretty timely, so there he is.
Sorry, I am ready. I am ready. The other mic wasn't on. I was actually talking, saying how ready I was.
Well, at least you didn't shut the program down.
No, I did not do that. I have done that in the past, though, to you.
It's the first time I ever did it. I think I was simply changing the name, but whatever happened. Fat finger mistake.
It happens. I've done it to you before.
All right, brother. Looks good. Right. Take it away.
Okay. Here we go. Yeah, if you look at the recording on the TradingView stream, if you look at the stream of that, I don't think I missed a beat as far as I'm concerned. I probably had it back up in a minute. But anyway, here we go. Good afternoon, everyone. Today is Monday, the 6th day of March, 2023. If you have not taken a free trial with us and you want to, go here to mytradingiq.com. Right here it says sign up for your free 5-day training now, 9:30 to 11:30 Eastern time. If you're going to sign up for the training, you really should download the trading platform. Okay, if you need any help downloading the trading platform, you just need to get a hold of us and let us know. You can email me, text me. You have all the other numbers. If it takes you more than 5 minutes to get that going, then you need to let us know, all right? Because we'll set it up with you, for you, on your desktop. You really need to get the trading platform down at the beginning of your trial. All right, so the recap today. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 6th day of March, 2023. We made 52 ticks on the NQ, 10 ticks in crude, 9 ticks in gold, and 16 ticks on the ES. Put us at 7:15 on the morning session today. It took 15 minutes and 9 trades because I stopped out somewhere along the way. Get to the goal for the day, and at that point we're up $345 because I had 3 contracts on this morning, so we have $345. I managed to keep 3 contracts on every day so far this month, and it took us. We took a total of 29 trades this morning. So now that I've added, 1, I've added the NQ, and 2, I've added the momentum trades, the continuation trades with the arrow. You guys will see all those popping up here with the arrow. The arrow was put on automatically. Okay, if you don't know that, then I'll be going into that in just a few minutes here. But that's put on automatically. All right, and there are other arrows that lead up to it to give you a warning or notice that it's probably going to be coming, just to give you a heads up. So that's what we're doing. All right, and that results in a lot of trades, and that's not even all of them. Anyway, on the month, we're at $3,063. That's over 4 trading days, averaging $765 per contract per 2-hour trading day. And on the year, we've gone 42 out of 43 days, and we've now gone 12 business days since our last non-green day. We've gone 390 business days since our last red day. And on the year, we're at $17,863, averaging $415 per contract per 2-hour trading day over 43 days. If you were to quit trading when you got your goal for the day, and you were to add 1 contract per month and do everything exactly like I did, you would have worked 11.56 hours getting your goal for the day. You would have averaged $710 per hour. That's what I did in the room. Okay. Now, if I had the right number of contracts on every time, I would have averaged $761 per hour. But last month, I messed it up 5 times. All right, so let's get into the actual trades. I keep wanting to put that down. All right, we'll start out with the gold here, okay? Now, on the gold, first of all, for those of you guys, let me bring up the question box because there might actually be questions today. For those of you guys who are not familiar with the arrows, if it's inside the context colors, then that's an arrow that's automatically put on. If it's outside, that's a trade that I did. Okay. But so you can see the arrows that are being triggered by the software in here. And for us this morning, it started out, excuse me. They started to trigger in here in the pre-market, and I didn't do anything with any of these. I didn't trade anything on gold for a little while here, it looks like. But there was one that triggered in right here, one that triggered here, another one here, and here. If it's red, that just means it's got a little more room to run. All right. The red would be a black, but what the red signifies is that both the lead line and the UC line are either in the overbought or oversold area on the bar before the trigger, actually the bar before or the bar of the trigger. But this is our first trade that we took right here on gold. That does not look right at all. I know there were more trades than that. On gold, we had one trade where we got +4, another trade where we got +4, and another trade where we got +1. So I don't know what happened to all my arrows in here, but there were some more trades in here that I took. I had 4 trades altogether. One of them was a break even. What the heck happened to all my arrows? I must have saved it somewhere else. Anyway, that was probably our last trade though. We got 1 tick. It looks like I think we got 1 tick on that one, and a couple other ones in here. We got a +4, a +4, and a break even. Sorry, I don't know what happened to all the arrows that I drew on that. Hopefully they're here on the crude one because we had more trades on the crude. And I'm not seeing all the arrows on the crude either. So something happened to all the arrows that I drew in this morning. I don't know what. I am looking at this on the right one, right? Yeah. Okay. Well, anyway, I'll tell you what happened with crude. Okay, you can see all the arrows that were drawn in by the software that triggered, indicated where you should be trading, all right, or at least looking for a trade. I did add one other thing in here. I'll show you. I think I have it running on the ES, but on the crude, we started out with a +2, then we got another +2 to put us at +4, and then we got another +6 to put us at +10. So there weren't a lot of arrows to be drawn in here on the crude, but there were a lot of trades that triggered in here. If you look at all these in here, like that one right there was way up at the top, and we didn't do anything with that, but I believe we did take this trade. Right? Nope, that was at 11.25. Maybe we didn't take that one. Might have been this one. Anyway, I don't know what happened to all those arrows that I drew in there, but nevertheless, that's what we did today, and we ended up with +10 ticks on the crude. What time is it? 12:51. Okay, so I have plenty of time to go through this. So to get the arrows to show up, for those of you guys who are in here who are already active partners, let me just show you this. First of all, if you've already got access to the context in the ultimate slingshot, you just have to close the context. You have to, first of all, get all the way out of TradingView, then get back into TradingView, close the context, all right, then bring it back up. Now, one of the things that's going to be in here when you bring this back up, if you go to the invite only scripts, you're going to have the context, and you go here, all right. Inside here, there are release notes that I put in there. Right down here, these are the release notes that I put in there yesterday. All right, the sensitivity input and the momentum arrows and the new trade zone. 1, 3, and 4 are the ones you really need to focus on. 2 and 5 for future enhancements. But 1, 3, and 4, the ones you need to focus on. There is a setting, a sensitivity input setting that is set. The default setting is good for the NQ and the ES, but for the crude oil and for the gold, you're going to have to set this. It's all the way in here. If you go to TIQ context and you click on this thing right here, the settings, and you scroll down to the bottom, down here it says sensitivity. For the crude oil, I have it set to 0.01. For the gold, I have it set to 0.05. Okay, 0.01 for the crude and 0.05 for the gold. What that does is it tells the software where you shouldn't be trading, okay, where it shouldn't be giving you any arrows. So if you change that just a little bit, it's going to make a difference on the arrows and where the arrows are going to trigger and where they're not going to trigger, okay? There was one other thing that I added to this that I call the no trade zone that is also set by that setting, that sensitivity setting. If you click on a no trade zone, the sensitivity setting where it is going to highlight areas where the slope of the long-term trend is not good for trading, okay? It's going to highlight those areas where you should probably not be looking for a trade. If you want to turn that on, you can. You don't have to. It's just another little crutch that I had for you. If you're going to put the momentum arrows on, you should also put the overbought and oversold arrows on, because the overbought and oversold arrows they're going to precede the momentum arrow. They're going to happen as it's approaching the time for that arrow to trigger. Right? You're usually going to get at least one before one of the black arrows. You're usually going to get at least one of those leading arrows. Okay, that's the way it's programmed. The sensitivity of the gold mark was 0.05. I'll go back and check just to make sure, but I'm pretty sure it's 0.05. Okay. Go to inputs, and it's not the pivot sensitivity. It's just the sensitivity. It's 0.05 right there. Okay. Now you can mess around with that if you want, but mess around with it. Make it like 0.06, 0.07, 0.04. If you make bigger changes, the arrows will just go away. Okay, it's really sensitive. That's why it's called sensitivity. But anyway, it's 12:54. So let me keep going. Yeah, the no trade zone. That's there is. I mean, it's a crutch that I needed as well as for everybody else. But like in areas like this on Friday, when I was bringing out the arrows for I think the first time on Friday, there were areas in Thursday afternoon is when it was. Thursday afternoon, there were areas where it was flat, where it was still giving arrows, and Friday it was flat, where it was still giving arrows. And I was actually trading where I shouldn't have been trading, where I know the long-term direction is flat, and I shouldn't be trading. So I created that thing to kind of alert myself as well as everyone else, if you want it, to don't trade when the long-term direction is flat. Again, that's your setting. You can change that setting to be as sensitive or not sensitive as you want. The smaller the number, the less sensitive it is. The larger the number, the more sensitive it is. Okay. So this is set to 0.35. If I were to go in there and change that from 0.35, look at all the red stuff right now. Look at that right there. And if I were to change that to make it less sensitive, say 0.15. See how it changed all that sensitivity? And so now it calls this a trading area in here. And there are some decent trades in there. But it's just right here where it's totally flat, it's not going to let you trade. It's not going to want you to trade. All right, you can trade whenever you want to trade, but it's suggesting don't do that. That's what that's all about. Okay. All right, so I'm going to put that back to where it was, 0.35. And that was it for the ES. Now, I didn't go over the trade setups for the ES, did I? I've only got 4 minutes left, so I'll try to do this as quick as I can. I think it looks like all my arrows are missing on the ES too. I got that one right at the end. I don't know why the end ones ended up there, but anyway, on the ES, we had a +2, then a +6 to get us to +8, and a +6 again to get us to 14, and then we had a +2 to get us to 16. That's where we ended on the ES. Okay, now I don't think I have all those arrows drawn in here. I don't know what happened to all my arrows. There's one. Oh, there's a couple of them. Is that today? That is today. Is that today? No, that's Friday. Okay, those are all on Friday. I don't know what happened to today's arrows, but you guys were all there this morning, or a bunch of you guys were there this morning and saw me do it. And the first hour anyway is in the live stream recording. But that was the ES today. During the break, let's see, there was a couple of trades right here during the break, and one really nice one right back here that triggered during the break. Right here, the long-term direction is flat, so you don't want to trade. Okay. And the NQ, we had a bunch of trades on the NQ again today, and good ones and bad ones. And it looks like it's just got it's just got that last. I don't know why it only saved that last mark, but I'll just tell you what happened with the NQ. Our first trade on the NQ was a stop out. We were minus 20. The next trade we picked up 4 ticks, got us to minus 16. Then the next trade we picked up another 4 ticks, got us to minus 12. Then we picked up 12, that got us to 0. Then we picked up 20, that got us to 20. And then 12, that got us to 32. And then we stopped out again and got us back down to 12. Then we picked up another 20 that got us back to 32. Then 16 that got us to 48. And then 4 that got us to 52. Okay, so I stopped out twice during the day on the NQ, and there were a bunch more trades than what I just said to you. There were a bunch more trades than that, but I mean, you can see some of them in here. You know, long trade. That one right there wouldn't have worked out. That one right there, when it's red, again, it's just telling you that it probably has more leg to it. It's got a chance for a bigger move. All right. Short trade, long trade. All of those would have been okay trades. Okay, every now and then you're gonna get one like this one that didn't work out, and then followed up by one right behind it that was more than twice the stop. Break even, a good trade. Break even, and possible profit. You see how all this is working in here, right? And this is the NQ with the no trade zones on. Okay, and that was our last trade that I took right there. I don't know why I only kept the last trades, but during the break, there was a trade there. That would have stopped out. That would have gotten it back. Nice trade. Break even, profit. And so we're looking at nothing right here. But that's what it looks like this morning, okay? So if you've not taken a free trial with us, go to the homepage at mytradingiq.com right here. Click on this button. When you do it, get the trading platform, okay? You really want to get that trading platform as soon as you can. All right. All right, so it's 1 o'clock. It's time for me to start the next stream and get into the live trading with everything that's going on in here. All right, so I'm going to do that right now. But before I do that, let me just go here. Let me hit this and see if I can actually do this. It looks like I can. Okay, I can't actually do that part yet. So this is where we stand on a month. We're at $3,063. Today we were up $7.15, and we're averaging $710 an hour if you quit trading when you get your goal for the day. On the year, we're at 17,863, averaging $415 per day. Okay, now let's get into the actual trading part. This I can do right now. Okay, I'll share that. I'll hide this, and I'll hit start stream here. And there we go. We are now streaming. All right. So as you can see here, we just had a trigger to go short on the ES. We're about to get one over here on the gold, I think. We may get one here on the gold. If we get a down close on this bar on the gold, the bearish separation right here suggesting we should go short. You see the shaded area right here is a no trade zone. If you are coming in here right now and you don't know what that no trade zone means, then take a free trial with us, right? Go to mytradingiq.com and sign up for the free trial, right? The arrows are put on automatically where trades set up, and then you take a look at the market when the arrows go on, and you determine whether it is a good time for a trade setup, right? So it's all on you to do that. The ES one here, I did take that. I'm short the ES right here. Okay, from 60, it should have been right here at 65.50, but I'm in at 64.50, which is not a great entry. But I'm in it anyway. Now, with every trade that I take, the stop is, well, for these three markets, with a 7-tick range, every trade that I take, the stop is 10 ticks. All right, with the NQ, I'm on a 16-tick range bar there, so the stop is 20 ticks. Now, for those of you guys who may be in here right now watching who don't know, with a range bar, you know where the top and the bottom of the bar. If you know where one end is, you know where the other end is going to be. Okay, that's why I use range bars, because you can be proactive with your trading. So in here, you know, I knew the top of this bar was at 67.50, so I knew the bottom was going to be, well, I was going to sell 8 ticks below that at 65.50, but somehow I got in the wrong place anyway. I'm sure I had an order waiting and I got a little slippage on it. Now, my risk management strategy is to move the stop to break even after I get 4 ticks in profit. Now, this should really have no problem dropping down to 40.63 right now. 40.63 at least. I got to go get that back. 40.63 is where this should drop down to. It shouldn't have any problem getting there. Okay, let me go get my DOM back up. I have to do it this way. Here it is. Okay, so we are just gonna let this one play out and see what happens. I'm off by a point on my entry on this, so if I stop out, I stop out. It happens. The gold just gave the down close off the ribbon. I know we don't have an arrow pointing at this one, but we do have bearish. Long-term direction is bearish right here, so the gold should work out as well, and that's also a trade. Okay, here's that one. Okay, so we're looking for the gold to drop, we're looking for the ES to drop, and the NQ is just going sideways. You can see that's in the no trade zone here. That is just going sideways to bearish, and actually it's got even sideways to bullish right now. It's just trading down below the ribbon, so that's kind of ugly the way it just comes together. On the ES, we're going to move our stop to break even after we get 4 ticks in profit. Now, if I'd gotten it in the right place, we would have moved the stop to break even already, because the right place would have been right there, and it would have hit 4 ticks in profit. But I always base my risk management from where my entry actually is, not where I think it should have been, or where it actually should have been. It's where I actually get the entry. I always base the risk management strategy from that. Right. Now, one of the things, I don't know if you know, if for everybody who's out here listening, like Jamolo, everybody who's out here listening, the risk management strategy is key. You know, anybody can enter a trade. Anybody knows how to enter a trade, but knowing how to manage your risk once you're in a trade, that's what separates the people who do this for a living and the people who do this and have to refill their account again and again and again. Right? The risk management strategy is key. If you don't have one, you should probably not trade with real money. My risk management strategy has been the same for over a decade. All right, I move the stop to break even after I get 4 ticks in profit, and on a 7-tick range bar, my stop is always 10 ticks to begin with. And what that does is it gives you breathing room. Now this one right here, I messed up on this trade, and I don't have as much breathing room because I'm 4 ticks off where my entry should have been. But my risk management strategy is going to be the same. I mean, you know, some people might say, well, since I'm 4 ticks off of my entry, you know, maybe I'll move my stop 4 ticks away, because that's where it would have been. You know what? I'm in the trade. I took the risk. I've accepted the risk. I'm going with that. Here on the crude oil right now, if we get a down close on this, I don't think it's actually hit the ribbon right there, but I'm going to go with that. Do I trade gold? Gold is right here. I got a live trade on gold right here right now. Jamolo, it's right over here. When I get 4 ticks in profit, I'm going to bump the stop to break even. I'll blow gold up and show it to you in more detail in a minute, okay? I want to see us trade to either take me out or get my stop to break even. We need 1 more tick over here on gold. If it comes right here, I'm going to throw my stop at break even. Okay, right now I have 10 ticks of risk on the gold as well. But yes, lots of gold. Well, as much as gold, that's us anyway. No, we're not really in charge of it. Gold is in charge of it. Let me slide this away. I thought I had to do that. Okay. So, I mean, with the ES, I'm just gonna, well, we got the crude trade going too now. Let me pump that off here and do that. Okay, we need this to go down one more tick on the gold to move the stop to break even. One more tick, it's almost there. One more tick, there it goes. Okay, so now I don't have any risk on the gold trade. All right, and gold should drop down to 1854 right now, 1854. All right, that is what gold should drop down to, right? 1854.0. Let me draw that in for you. It's right here. Okay, that's where gold should go right now. The crude oil's got a trade here too, and the crude should go through 80.13 on its way down to 80.06. That's what's going on with crude. Okay, should go through 80.13 on its way down to 80.06. Here's 80.13, so it's on its way down to 80.06 right here. Okay, that's what should happen there. I'm going to lock in a little bit of profit over here on the gold. Okay, and I'm going to throw my stop at break even here on the crude. And so I'm looking for an opportunity to get my stop to break even here on the ES, but I don't have it yet. What did I say the gold was going to go down to? 54.0. Okay, so I can throw a target there, but the way gold usually goes, it usually goes in big chunks. It runs in big chunks. Let me get rid of my original stop. All right, so I'm out of break even on the crude oil. And the gold, I'm going to lock in 2 more ticks. I'm at +4 on the gold. And now I like 53.8 on the gold. 53.8. Let me bring that back up so I can see if you had any more questions in there. Yeah, we're going to look at it in just a sec. Okay, I'll look at it in more detail here in just a sec. The ES needs to go down 1 more tick. There it is. I can finally get that ES stop to break even. Now, if I would have had the great entry or the proper entry on the ES, it would be at 8 ticks right now, +8 ticks. I'm going to lock in 2 on that, and I'm going to lock in 2 more over here on the gold. Okay, so we're at +6 on the gold. We're at +2 on the ES. We ended up with a break even on the crude. Okay, let me get all of that together for you. This one here was a break even. That's a yellow. Say okay on that. The ES is still going. The ES got to the first target number that I gave. There's +4, +6, +8 on the ES, +10, 12, +12 on the ES, and back over here on the crude, I'm on the gold, we're going to lock in. That's 8 right there on the gold. So we got 12 on the ES, and I'll slide that back over here, and 8 on the gold. Okay, now just a sec. Well, I'll show you in just a second here what we got going on. That goes up here, and I'll make that blue. Blue, and we get another one of those over here on the ES. There. So we picked up, was that 12 ES? Right. 12 ES. Break even crude and 8 on gold. Yeah, good. Okay. So, and we're hitting all the targets that I set out for it too. You see, that was the first one. This was the first one, and this one right here is the first one over here. So, first time joining, how do I keep up with so many panels? I've been doing this a really long time. You know, you don't have to. We don't recommend. As a matter of fact, that's a good point. We don't recommend. The MQ just had a trade here too that I didn't do, but we don't recommend that anybody that's starting out with us try to do as many markets as me. I'm just doing this to show you that it works on a whole bunch of different markets. It works on all markets. Now, if you want to see equities, I can show you it on equities. If you want to see it on crypto, I can show it to you on crypto. I can show it to you on any market you want me to show it to you on. It's, you know, I'm just showing you, like, the NQ just had a trade. Now I'm throwing my stop at break even on the NQ, and now I'm throwing my stop at +8 on the NQ, 12 on the NQ, and there's 12 more on the NQ. Okay, so let me write that down. 12 NQ. So, all right, let me slow down a little bit so I can answer the questions you guys are asking, and I can show you a little bit more about the gold. All right. Yeah, what was just typed in there? What Dwayne just typed in there is to focus on 1 or 2 markets in the beginning. You don't have to try to do every market, but I mean, even at night, or even if you want to do equities, if you want to do something on stocks, you know, we can look at stocks in a minute. But let me actually look at this gold in a little more detail. Okay, I wanted to show going to show you Jmolo. So this is what gold looks like. Now the outer band's the long-term direction. Okay, you want those to be trending with you, like either bullish or bearish. Okay, and what you're looking for is for price to pull back and then push back down. Pull back and push back down, pull back and push back down, pull back and push back down. Now the automated arrows, they're going to show you places where price pulls back to areas that are support or resistance defined as by previous price action. Everything we do is based on price action. Okay. So I mean, you see in here all these indications in here. Those are all done by the software. And when they actually trigger, you know, you get a little lead up to it, like these little arrows happen before the more serious one. They're letting you know, hey, heads up. You know, you're probably gonna get a trade on the next bar. You could get a trade on the next bar. So pay attention to what's going on. And then you look at it, and you look down here, and you look up here, and you look at this, and you make a decision whether you want to take that trade or not. You know, some of them are really easy to see and take, and some of them, you know, some of them you stop out on. Like this one right here would have been a stop out if we'd have done that. But this one right here, you know, it would have been a great gain. This one right over here didn't have an arrow on it. The reason it didn't have an arrow is because down here in the slingshot, it didn't pull back deep enough. Okay, and that's okay as long as the long-term trend is still bearish. It pulls back into the ribbon and gives you the down close. That's still a great trade, and that's what we just did right there. Okay, the arrows don't trigger on every one of those, but they do trigger. Okay. Well, I'm going to recommend anybody that's coming in here right now, go out to mytradingiq.com and take the free trial. Right. If you go to mytradingiq.com in the upper right-hand corner, I can't really show it in here, but if you go in the upper right-hand corner of mytradingiq.com, there's a thing called Trading Platforms. Click on that, you'll see the instructions to give us your TradingView profile name, and we can get you set up, set up today, so you have all this stuff going on in your charts if you want to. Okay, that is all you have to do. Now that I'm sorry, Gomolo. Do you want me to call you something else, or is that what you want me to call you? I can show you more on the gold, but if you get into the room, we do this 2 hours a day every business day. We do it from 9:30 to 11:30 Eastern time every business day. And in there, I'm like in here, I'm only showing you TradingView stuff. Okay, and it's great because TradingView has a lot of stuff that the majority of what I want to show you is on TradingView. But I can show you other things. Like in here, I can't show you our website, and I can't do stuff like that. But one of the things I'll tell you about that I can't show you, at the end of every session in the morning, we fill out a spreadsheet, and that spreadsheet's got our daily results going back 10 years, well, over 10 years now. That's something that most places will never give you. They probably don't calculate and will not give you, even if you ask for it. But I'm happy to give you that, give you access to that. Take the free trial and you get access to that, okay? As well as everything else. We had a, yes, this is all TradingView software right here. This is a TradingView live stream, so I'm only showing TradingView stuff right here. And so you can see a couple other trades triggered in here. But what I like to see when it pulls back like this, I like to see it continue the trend and move down and put in a lower swing like this one right here did. So if this were to pull back and give us another trigger, I'd be more inclined to take it than I am to take this crude one right here that did not put in a lower swing and continue the trend. Over here on gold, it did put in a lower swing and continue the trend. So if that were to give us another trade, I would be more inclined to take it. Same thing over here with the NQ. That did not give us a long trend, a lower low, did not continue the trend. And you see over here, we're getting into the no trade zone. See that background color right there? The no trade zone is starting to trigger in here, so you don't want to trade when it's like that. I only have that running on a couple of these. I guess I could put it on these other ones as well. If I go in here and I go down here, click on no trade zone. There's no trade zone for that one. Oops. And in this one, no trade zone for this one. Okay, now I did put this on in the morning session because it's just a lot to look at. And if you think it's busy right now. All right, So far we've got a few trades that went off. Made 12 on the NQ, 12 on the ES, 8 on gold, and a break even on crude so far. Okay. I am going to figure out how to make it check that the prior swing low is a lower pivot than the one before it. I haven't figured that out yet, but I'm working on it. I got pretty close to that. What do I like on crude? On the downside on crude? Well, I want to get down here to this number at 80.06. Now that was the number, I didn't pick that number from here. I picked that number from the DOM, but it also works out to be the prior swing low. Okay, Garrett. Greg. Greg. You said that backwards. I mean, you put your name in backwards this morning. All right, so right now I'd be waiting right now for this to pull back up and hit the ribbon. If I was going to take another trade here, I really don't like it because I wanted it to put in a lower swing. And if you look at this on the bigger picture, let's do that. This is a pullback in the upper and in the bigger picture uptrend. Okay, remember the markets are always doing the same thing, right? They're always going up and down and up and down and up and down and up. In the bigger picture, that's what this is doing. So now in this small time frame, we can take a trade right here that's part of this leg down in the bigger picture. But in my small time frame world that we work in, you have to recognize that this is part of the bigger picture pullback. So what's likely to happen right now is this is going to start going back up and go through this and start giving us some long trades. All right. So we were able to take advantage of this move down right here. We picked up what? I've got a break even on it, but we're able to take advantage of that anyway to get into the trade. And there was some chance to take some profit on that. And so now what I anticipate is that it's going to go back up and start moving back up for us. Okay. And you can do that with any one of these markets. Just look at the bigger picture. Well, with the gold, it's saying don't look at anything right now. See all those no trade zones? And they're going in both directions. So the gold is really choppy. So you probably just want to stay away from gold. Take what it gives you, but don't try to push anything with gold. And if you look at the ES on a bigger picture, now this is the move up right here. And we've actually done about a 50% retracement of this move up right here. So if it's going to bounce, now's a good time for it to bounce. You see this little arrow is a lead up to the bigger arrow, the more significant arrow. And that's what's happening right here. If we were to get a down close right here on the ES, I'd take that trade. All right, if this bar were to give us a down close, I'd take that trade. Okay. Well, I explained the free trial. How do I access 101? Do I have a website or something? Yes. Go to mytradingiq.com. mytradingiq.com. All right. Sign up for the free trial there. And the free trial is 5 business days. All right. And in the free trial, you get to use the indicators on whatever platform we have that you want. I would recommend using TradingView. Get in there and you get access to the indicators and you get access to one-on-one training during the free trial. All right, all you have to do is let us know that you want one-on-one training, and we'll set the indicators up for you. As soon as I'm done with this in 10 minutes, I have another meeting with the fellow who took the trial today, and I'm going to set up his indicators for him. See right here, the crude is giving us another opportunity to go short right here. Now this is a lot better looking than the last opportunity it had, and then it's pulled back a little bit deeper into the ribbon. Okay, I still think that it's trying to go up right here, not so much push down. I think it's trying to go up. So I'm going to leave that alone. But right here, this one on the ES, I like that one. Now 63.75 is what that one's at on the ES. Okay, that one put in the lower swing over here. Okay, that put in the lower swing and it just gave us another opportunity to go short in here. So I like the ES one. I took the ES one. Okay, I'm taking it right now. Here. Okay, I like the ES one. I just jumped on that. The NQ over here is actually getting out of the no trade zone and it's actually starting to get bullish. Now that does not fare well for the ES trade, but they're, though they're both indices, they're a different set of stocks. So, it happened earlier today where one went one way and one went the other way. So we'll just have to wait and see what happens with that. But I am short on this and I'm not long on the NQ. This is actually an NQ long trade right here, but I'm not long on the NQ right now. But yeah. Go out to mytradingiq.com, sign up for the free trial. And then you're going to get some automated emails that come through, but I'll send you personal emails as well. If you get something from tech, that's TECH@CFRN.net, that's me. Okay. If you get it from TECH@CFRN.net, that's going to be from me. All right, so every trade, as I said, starts out with 10 ticks of risk. So we have 10 ticks of risk on the CS trade. It has not gone 4 ticks into profit yet, so we're not looking to bump the stop to break even at this point. We're not looking to do anything at this point. You know, we need it to get down to right here. It's got to get down to 63.50. I could put, if I had those little alarm things, I could put one on there that pop up a window when it hits down there at 63.50, but I'm not going to do that right now because I don't have it set. All right, so let me go back here and see if there were any more questions in this one. I'm having trouble keeping everything all visible in one screen. Oh, even on my big TV that I have on the other monitor. Okay, yeah, so to take the free trial, you go out to mytradingiq.com. Okay, mytradingiq.com. And over here on the gold, if we get a down close, not of this bar, yeah, I guess that bar. Okay, so the gold did give us a short right there. I was looking to see if it was in the right place, if the slingshot was in the right place to give a short, to give an arrow on the down close on the gold. And it is. It's done just well enough to give us the arrow over there on the gold. All right. So we're in the CS trade right now. We're waiting for the ES trade. If the NQ were to pull back here, I'd probably take an NQ trade if we were to pull back and give it to us. We're just waiting. What time is it? 1:23. Okay, well, the S is going kind of slow in here. It might stop us out. If it does, it does. You know, it's 10 ticks of risk, and it is what it is. See right here, off of the ribbon right there. That was a long trade. The long-term direction is bullish. It comes down, it hits the ribbon, gives you an up close. The black is in the green. That's what you're looking for. Okay. All right, so I got a chance to stop talking for a minute. Let me slide that over. There you go. Oh, the stream keeps cutting off. Okay, you know what? Did I not paste that up at the top? Hang on. Let me paste that in there for you here. Copy, paste this right here. Paste. There. Okay, so the ES is starting to work its way down. It needs to get right to here for me to bump the stop to break even. Okay. It needs to get down to here for me to bump that stop to break even. The NQ is about to give us another trade. The ES needs to go down one more tick beyond 63.75 for me to get the risk off the trade. I think it wants to go all the way down here. 60.5. One more tick. There it is. So I don't have any risk on the ES trade now. Do I have anything else going on? Do I have anything else going on is the question. I'm going to lock in some profit on the CS trade, +2, +4. Okay, I was looking over at the NQ, hoping for a trade over there, but it doesn't look like it's going to happen. So we're at +4 on the ES. The gold's got a trade. Let me put that on. Okay, it hasn't gone 4 ticks into profit yet, so I can take the gold trade right here, right now. And that is +6, 8, 10, and I'm out with 10 more on the ES. Okay, let me slide that back over where it belongs. Okay, so there's 10 more on the ES. And we'll wait for the gold to give us something here. It's got to go 4 ticks into profit to move that stop to break even. Oops, I want to click on this. Oops, I got to move this over. Click that. And that was from right here. Right. Okay, so we're waiting on the gold to see what that does. The crude oil, we were looking for the crude to go down too. We did get the indication right in here for the crude to go down. It hasn't done that yet. The NQ, I was looking for another bounce here, but it didn't give it to us. The ES seems to be leading the pack there out of those two indices. Not that they have the same stocks, but still the ES seems to be leading the pack this time. All right. So back over here in the live chat. So we're in a no trade zone here on the NQ. You see that, right? Maybe I should make it a different color. To change the color of the no trade zone, you just go into it right down here. Okay, down here at the bottom. And you can make it like, I don't know. I can make it darker red, I suppose. Just leave it the color it is, but make it darker. There. Or make it yellow. Black. I don't know. You can do whatever you want with it. I'm just going to leave it red a little bit. I know what it means. All right, so we just got out of the no trade zone right in here. What was that noise? Well, the arrow would not print if it were still in no trade zone, but looking at it, it seems like it should still be in the no trade zone right here. I'm not sure. It is still in no trade zone. I'm sorry, I changed the color just a little bit right there. I messed that up. Okay, that's why that printed. It shouldn't have actually printed there because it's still in no trade zone. The long-term direction is flat right here. That's why you don't want to trade in there. Okay, when that long direction is flat. Okay, so we're waiting for the gold to perform, and the crude didn't do anything, and the ES gave us another 10 ticks. Yeah. So the ES is in a trade zone right here. We're not going to trade anything on that right now. This is back in the same thing over here on the NQ. So far it is 128. We got about 2 minutes left in here. So I don't know what this gold trade is going to end up with here. The next 2 minutes, 1 minute now. If we have enough time for this. Hopefully it's going to work out. But if it doesn't, it doesn't. We'll see. Still nothing here on the NQ. We do have a little bit of bullish separation now, though. It's a little bit of bullish separation. I think we just got out of the no trade zone. Okay. I think we have enough separation to actually take a long trade there if we got it on the NQ. Let me stick that right in there. And we've got a low here of 94.50, so it'd be up at 98.50 is where it would be. Remember, it's 4 points above the bottom of the bar. 4 points above the bottom of the bar. Okay, so the gold is still trying to work itself out over here. I think the gold is going to drop down to 53.6 this time. Okay, 53.6. That's the number. All right. We need the up close. There's the up close on the NQ. Now, I don't really have any numbers on the upside for the NQ. It's kind of really messy in here. With the NQ, it's just getting out of some really sideways chop right here. And one of the things that I noticed is a lot of times the first trade after coming out of a no trade zone, a lot of times that first trade is going to be well, I'll let you guys figure all that out. Anyway, it's 1:30, guys. It's time for me to wrap up this live stream. Does anybody who's in the live stream right now, do any of you guys have any questions? All right. If you want to take a free trial, I posted in there how to take the free trial. It's a 5-day free trial. All right. You get access to everything that we have for 5 consecutive business days. One more tick here and that stock goes to break even on the gold. Come on, one more tick. Get down. Gold's going to go, I think. I don't really see I don't really see the number down below that it's going to go down to. I mean, I did see this number right here that I think it's going to go down to. But there's got to be something below that, I think, that it's going to get through. We're in no trade zones pretty much everywhere right now. In the crude, in the ES, in the NQ. And gold is the only one we're not, and that's the only one we have a trade on in. All right. Well, I kind of want to let this gold trade play out here and see how it's going to work out before I actually end the live stream. But I do have another meeting coming up, but I have to get ready for that. All right. Well, so far in this session, I really want the gold to do something right here. If it goes down one more tick, I'm going to lock in one tick on it. And then, nope, it didn't go down one more tick. Okay, well, I'm just going to put in what we've done so far. All right, so far in this session, we didn't check any equities. You guys didn't ask for any equities. Maybe I'll go look at one equity before I go. Let's look at Tesla. Okay, let's just do Tesla. Here, go look at a stock. Look at Tesla. We're going to look at that on 100 range. 100 range. Okay, so with Tesla right now, earlier today, right up here, it pulled back up. Earlier today, it pulled back up. It hit the ribbon, gave it down close. So you would have shorted it there. You could have shorted it again here and in here. Now I got to change the settings on this so the ribbons will work. Actually, we're in a no trade zone. That's why I got to change the settings for equities. To get the arrows going on equities, you got to change this down to 0.05, I think. Yeah, there it is. Okay, so it's showing some drawing objects that I had from prior things, but you can see in here, it was given all the indications in here for the shorts, and it's coming up with another one up here. It's gonna, if it comes up and it hits the ribbon, gives us a down close. That's gonna give us another indication to sell. But it said sell there, sell there, sell there, and sell there so far today. So it works on equities. It works on whatever you want it to work on. Okay, for all you guys who are in here who are in the live stream right now, you can look at it on anything you want. This 100 range, what that means is every bar is $1. Okay, every bar is $1. All right, so I've gone over my time. I just wanted to show you that. So we're going to end this session. Plus 22 ES plus 12 MQ plus 8 gold. Gold is still going. And break even crude. Did I spell session wrong? I did. Break even crude. On live gold trading left running. Okay, that is it for this session, guys. I'm gonna end the live stream right now. Thanks for coming today. We'll be back tomorrow, 1 p.m. tomorrow. If you want to take the free trial with us and continue this thing, start out tomorrow morning at 9:30 a.m. Okay, and we'll get you going tonight if you want, or this afternoon. Just go out to mytradingiq.com, sign up for the free trial there. It is 5 days, and you get access to everything, and you get one-on-one training during the 5 days. All right, do that. We'll get you all set up and get you going by the end of the day today. All right, thanks for coming today. All right, Michael, the no trade zone. No trade zone is identified. Well, first of all, you pick how big that zone is going to be with the input down here. Okay, but basically what that tells you, the lower this number is, the less sensitive it is. So the less area that's going to be covered by the no trade, the higher that number is, the higher the no trade zone is going to be. The more you're going to see in the no trade zone. Like right now, if I change this back, Tesla back to the NQ, the no trade zone inside the NQ is going to be huge. Okay, because I just changed that. Or maybe it'll be tiny, actually. Yeah, because I changed it down to 0.01 or 0.05 or something like that. So it'll be tiny on the NQ. And what that is an indication of the slope of the long-term direction. If the long-term direction starts to flatten out, then you don't want to be trading. Okay, when it flattens out, you don't want to be trading. And that's what it's telling you. Basically, that's all it's telling you. It's saying, if you don't want to trade when the long-term direction is flat, then the long-term direction is flat. Don't trade in that area. Like right here where it crossed over, the long-term direction crossed. It was starting to suggest, before it actually crossed, it was starting to suggest that something was going on, and it's going to go flat and cross. And that's what happened in there. Okay. Gary, you have the momentum box checked on both. The arrows don't show. They do. That's because you don't have the, Gary, that setting. On the crude, it should be 0.01. And on the gold, it should be 0.05. Okay. 0.01 and 0.05 is that sensitivity setting. Okay. These top two lines are the long-term direction, Michael. The top two lines right here, they're the long-term direction. Okay. So if that's flat, then you don't want to be trading. The gold, I can kind of throw my stuff at break even, I think. If that's flat, you don't want to be trading. Right? You want to wait until it's not flat. I know it gave a nice trade right here, even though it was flat. But most of the time, it's going to be a lead into a lot of flatness. There it is. Now I can throw myself +1 tick on the gold after making me wait all that time. But if you look at not so much the NQ, but yeah, I guess you can look at right in here in the NQ. You see where it got flat in here? It said to stop trading through all that flatness, all through here. And then when it started to get bullish again, got out of the no trade zone, it started to get more trades. Okay. That's what that's all about. Okay. All right. That is it, guys. I'm going to wrap it up and pass it back out to fabulous Phoenix, Arizona, and Studio A overlooking South Mountain, America's largest city park. And one more take on my gold trade. And Dwayne, if you are ready, you can take it back, and I'll reorganize all this and set up the next meeting. Okay, ready to go.
Okay, on the morning session, recap of the recap.
We had 15 minutes and 9 trades to get to $345 a contract. $345 total, sorry.
Good job.
15 minutes, 9 trades, $345.
Hey guys, we're looking at the daily chart again, and last night in the discussion group, we said if price can get above the 24% Fib retracement, we would most likely run into trouble where the most recent bearish cross took place. And as you can see, that's exactly how it unfolded. That's not magic. I don't have crystal balls. That's just how it works. So now what we're looking for is if we get a close back below the 24% Fib and below the daily BVC, we've got potential support at the stop line, potential support at red and falling, which if we close with a green candle today is probably going to turn into blue and climbing, which represents support. Then of course we know we've got potential support at the 38% Fib retracement. On the 30-minute chart, we talked about, before Michael came on, that because the step line was crossing blue and climbing, we would most likely get a pullback to the BVC. Now, this candle still has 20 minutes of life left in it. So we can't say that the pullback didn't hold yet. This may be one of the instances where price does trade through the BVC. We know that's going to happen, but more often than not, the pullback to the BVC does hold. So you have to be patient here, or, I mean, there is an opportunity down to, but this is last week's zone. So those of you that are members and on the free trial, you already have the new zones. We also said on the Dow, we were looking for a pullback to the VVC because the step line had crossed blue and climbing. Blue and climbing may be on its way to red and falling, which our support is at the low of the current 30-minute candle. And then right here. On the Russell, remember we did not have the step line crossing, and so we said we should continue to look for further downside movement on the Russell. That's exactly how it unfolded. On the NQ, remember I drew in this window of opportunity at the beginning of the broadcast, and I said I won't put this in the alert channel because it's a counter trend trade because price is above the VVC. But as you can see, we fill the window beautifully and then some. Now we're going to find out if the pullback is going to hold. It held here. So far it's holding here. But again, there's 18 minutes left in the life of this candle. If the pullback holds, you've got potential resistance at the step line and balloon climbing. On crude, we did hit the long target. And we're starting to get that same cross, step line crossing, balloon climbing. So be prepared for a pullback. Again, I won't put this in the alert channel because it's not a trend trade. But there's a window of opportunity on the way to the BBC for those who do choose to trade counter trend. On gold, we're below the BBC. We got red and falling. Got potential support. We talked about it earlier at this low right here, which is what we're just about to run into. And then as we look left, we got potential support here, 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 and here. Silver hit the short target. We're now below the short target. And everything is positioned for silver to continue lower. Looking left, you can see that this low matches that low. Next potential support is at that low, and wide open spaces down to the zone. But again, these are last week's zones. The new zones came out this morning at 6:15 a.m. Eastern. So all members and free trial members have the new zones, but all the alerts published last night were based on last week's zones. So tomorrow on the afternoon broadcast, I will have the new zones on the chart. And the euro. We got that cross. Step line has crossed over. This may be the high of the session. Look for a pullback to last week's zone, the BBC, and then there's the potential for another leg to the upside. If the pullback doesn't hold and we trade through the BBC, then right here where the bullish cross took place, you should expect support there. Okay? All right. See what's happening? See why it's happening? This was discussed last night in the discussion group in Telegram. If you weren't following the Telegram channel last night, go look. On crude, Gary, that's a counter trend trade. That's why I'm not putting it in the alert channel. But the step line is in the process of crossing. We're printing a red candle. And so at this point, it would be more likely for price to pull back to the BBC than for it to continue higher from here. But I would let this candle complete, which will be in 15 minutes. And then if you do practice counter trend trading, there it is. Roughly 79.90 down to 79.70. So that little window is worth about $200 per contract trade. And with that, we will, you're welcome, Gary. We'll wrap it up with a good word for the day. Next couple days, we'll talk about getting beyond the guesswork. Philippians 2:13. For it is God who works in you to will and to act in order to fulfill his good purpose. Not ours, but his. Remember the childhood game, pin tail on the donkey? Winning in that game was a stab in the dark process. And for many of God's children, determining his will and purpose for their lives amounts to a similar method. But it Doesn't have to. Many traders approach trading like pin the tail on the donkey, but it doesn't have to be that way. Now, moving away from trading and back to life. Number 1, commit yourself to obeying God's will. Understanding God's will is impossible until you commit yourself unreservedly to actually doing it. Any desire to retain your own will blinds you to His will. You don't need a detailed map because it's a journey of faith. Be confident that God loves you and wants only the best for you, and that when you submit yourself to Him, we read in Romans 12:2, and be not conformed to this world, but be ye transformed by the renewing of your mind, that ye may prove that which is good and acceptable and the perfect will of God. Listen for the shepherd's voice and trust it. Jesus doesn't leave us alone to figure out His will for our life. He is our good shepherd, and when He brings out His own sheep, He goes before them, and the sheep follow Him, for they know His voice. John 10:3. Note the words, recognize His voice. With time and experience, you will learn to know when God is speaking to you. You may not like what He's saying, but He's God. Like Abraham, who submitted to God's will without knowing where he would be led, you're called to surrender your will without knowing where He will ultimately lead you. God promises wisdom, insight, and understanding, not just to the spiritually smart, but to any person who lacks wisdom. See James 1:5. So believe that His wisdom is yours. That's getting beyond the guesswork, part 1. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.